I'm willing to withstand a lot more volatility today than I was 7 years ago.
It is this more bewildering, schizophrenic corner of the market.
There's a real industry here beyond some of the madness, and the madness just dominates the headlines.
Please drop the ticker in the chat. I'd like to move 5 blocks closer to the beach. Just have everything right where it needs to be. Even when it is right where it needs to be, there's still always some form of an issue.
Right.
But anyway, with all that being said, ladies and gentlemen, thanks for tuning into The Scoop, and thanks for dealing with a lot of those issues over the past. This is going to be, I think, a few episodes ago with Tom Emmer was our 500th episode of the program. So this is like 506 or 505, and Jeff is no stranger to the program, and we appreciate the sort of candor and discipline and experience with which he joins the show. Thanks for taking the time.
Great. Thanks for having me back, Frank.
Uranium.io, an entirely new marketplace for trading uranium and powered by Tezos technology, is live. As global energy demand rises and nuclear power becomes a key player in decarbonization, demand for U3O8 is increasing. But up until now, its access to retail investors has been limited. Unlike other precious metals like gold or silver, the traditional uranium market has high barriers with minimum lot sizes of tens of thousands of pounds that's limited retail participation. Tokenized uranium breaks these barriers, enabling anyone to own physical uranium with accessible pricing and no need for complex storage. Investing in uranium is now widely accessible, and you can learn more at www.uranium.io. The market looks a little bit different. We were just opining and sort of, I was at least pontificating ad nauseum about the extent to which the market discourse has been driven by just incessant jokesters, I would say. And it kind of gets me angry, and it got you angry in this recent blog post that you wrote about the sentiment in the market. I just feel like there's and I had back-to-back tweets, the first of which was, look at all of these banks that are doing XYZ in crypto, finally getting serious, finally developing custody solutions, finally having the green light and the lack of ire from regulators to enter this market, juxtaposed with a discourse driven by wannabe Gordon Gekko scammers based out of regions of the world, which I will not describe for fear of reprisal from folks living in those cities, Miami and Dubai. And it is just like, why am I, and it's even our site, you know, I might get yelled at by some of my counterparts on the news side. Everything is Malay and freaking Portnoy and meme coin this, meme coin that. It's just like, enough. I'm just so tired of it because there's actually some interesting growth going on. So let's just start there. I'll stop talking. You kind of point out this disconnection between the growth that this space has experienced and the market sentiment. Let's start there. What's the rub?
Yeah, I mean, you hit a lot of it, which is, you know, like prices are down, and obviously that makes people angry in general. But that's not really what makes me angry. What makes me angry is, you know, I've been doing this now at Arca for 7 years, and obviously several years before we even started Arca back in 2018. And I mean, it's never been clearer to me that the growth of blockchain is real and where we're headed. And there's so many distinct sectors now. There's so many distinct types of tokens. There's so many different areas of crypto. And as you mentioned, like, you know, Arca, for example, straddles the line quite a bit between the traditional finance world and the crypto kind of degen world. And it's just like two completely, you know, day and night in terms of who we're talking to at a given time. You're talking to some, you know, crypto native company or media or investor, and they're miserable. They're ready to kill themselves. All they're talking about is Trump and Melania and Portnoy and Libra and everything like that. You talk to traditional investors, and all they're talking about is, wow, there's some amazing things happening in the space right now. You've got, like you said, you've got banks lining up to custody this. You've got Bank of America, Morgan Stanley talking about what they want to do in this space. You've got BlackRock talking about how the SEC should rapidly approve the tokenization of bonds and stocks. You've got the U.S. president and his cabinet talking about digital assets constantly and getting interest in a Bitcoin strategic reserve as well as real stablecoin friendly legislation. You've got SEC Commissioner Peirce releasing the most crypto-friendly priority list ever, which basically said that everything that's currently legal and not fraud is totally fine. And you've got stablecoins at all-time highs. You've got prediction markets built on blockchain. You've got AI agents interacting on chain. You've got DEX volumes at all-time highs. I mean, like, this should be a celebration that, we finally came out of the shadows and into real world. And instead, this area of crypto that's, maybe 2 or 3% of the total market is dominating 99% of mindshare and media interactions. And what I mean by this, like, the size of meme coins in crypto is what, maybe 100 billion on a $3 trillion industry. So you're talking about maybe 3% of the market, which, by the way, is the same ratio as you would see in the US equity market. About 3% of the US equity market is, dead SPACs and meme stocks like Bed Bath & Beyond and GameStop and AMC. I mean, imagine if every single time, a long short equity manager or an investor in the equity market was brought onto CNBC, all they talked about was broken SPACs and GameStop. You'd be like, what are we doing here? Right? There's this other area of the market. I'm in healthcare, or I'm in financial services, or I'm in real estate. Like, can we talk about that? And it's like, no, we are going to just force feed GameStop on you and force you to talk about this. And like, that's what this industry is doing right now. It is such a meaningless portion of the crypto market, and it is just everywhere.
I reckon that it's tied to this awkward adolescent stage in which our space exists, where I think a lot of this angst, to use that word you're describing, stems from a transition period where there is this whole segment of the market that's a bit more mature that likely does not have that 100x sort of opportunity set for the retail investor. And if you think about, which has traditionally been the opportunity for crypto, when you think about where there is the 100x get rich relatively quick, it is this more bewildering, schizophrenic corner of the market. And so maybe that's why the mind share is driven there, because that's where these, storied profits can be made relative to things that seem more mature, like Bitcoin, for instance, which is a large component of the market. I think it reached its all-time high from a market cap relative to the overall size of the market perspective. Newcomers or folks that are mercenary in nature are not going to get 100x on Bitcoin. So when they see something like Bank of America, Citi, Morgan Stanley doing really interesting things, I hear stories about I have a friend who works with FAs, and all of these firms are looking at structuring new types of funds and products. Mm-hmm. It's not going to be as interesting to them because Bitcoin's not going to 10, 15x over the next month.
Yeah, for sure. But I also think, again, I think that the hard part for me is some of it is intentional, right? I mean, there are some Bitcoin focused, Bitcoin only firms that are intentionally trying to act like the rest of the market is nothing, right? The fact that we still use the term altcoin, for example, is just insane, right? I mean, we have, again, multiple real sectors and types of tokens and types of different use cases of blockchain. To lump them all into altcoins is incredibly intentional, right? By firms and individuals who just want Bitcoin to succeed and nothing else. And that's fine. Like, certainly people are going to have agendas and whatnot. But a lot of it I still think is just misinformation. A lot of the world out there, like I follow a lot of traditional finance investors out there, whether those are research firms or other fund managers. And I honestly think a lot of them just have no idea. Like, I'll pick on one person here. I mean, there's this guy, Jesse Colombo, goes by the Bubble, writes a lot of pretty good research. The other day tweeted out, a screenshot of a bunch of tokens that were all in the red that day and said, I want to see these worthless fake currencies crash to zero where they belong. The sooner that happens, the sooner humanity can move on from this pointless distraction. And this is the screenshot that he had. It had Bitcoin, it had Ethereum and Solana, it had BNB, it had Aave, it had Dogecoin. So in one profoundly stupid tweet, he just combined a currency, Bitcoin, two smart contract platforms that are powering most of all of blockchain's usage in Solana and Ethereum. Basically, the quasi-equity loyal rewards token from Binance, which is a $100 billion plus profitable company, and there's no doubt that that token is more equity-like than it is anything else. A pure meme coin in Doge, and Aave, the token of the largest on-chain bank that has 33 billion in deposits. And if we're going to just continue to just be this ignorant that we're just combining all of these things into one vehicle just because they are wrapped in the same technology called blockchain, I don't know how do you get beyond that from an information standpoint, other than just the majority of people in crypto like yourself and myself and others who have a little bit of a voice just continue to pound this over and over again, that like crypto is a wrapper that houses a lot of really good token ideas and projects and also a lot of crap, but we can't just combine them all into one thing. I mean, that's like the equivalent of saying that everything made out of wood is the same, even though we know that wood can make, multi-million-dollar mansions, or it can make, number 2 pencils and trinkets. Like, just because it's built with the same underlying structure doesn't mean it's the same output. And I think that's where my frustration is like, it's been 8 years since the Ethereum ICO boom, where all these different use cases and token types have emerged. And it's still like pulling teeth trying to get people to recognize that there's a real industry here beyond some of the madness. And the madness just dominates the headlines.
Well, I think for folks like that, I think a large contributor to this view of crypto as a monolith or monolithic in nature is tied to the fact that even folks within the industry are guilty of this sin of focusing on the speculative aspect of it versus what these things do and how people are using them. And I think, I was at the, down in DC, and somebody asked me, a congressman, what I thought the biggest issue in crypto was right now. And I highlighted this point that you're making, is that the outside world views it as a monolith, as sort of everything is out there achieving the same or attempting to achieve the same goal. So you talk about this, and that's the information gap, right? That people don't understand, that there's this lack of education around what each of these blockchains can do, which you outline in the post. Are there any specific misconceptions, like in your attempts to try to get folks to gronk this and break down the different segments? What do you think is the most glaring misconception?
Well, I think the biggest one is still thinking that everything is like a derivative of Bitcoin, right? I mean, again, the easiest way that I describe it, probably the thing that I describe the most to new investors or sophisticated traditional investors, that probably has the highest kind of hit ratio, is when I say that think of crypto no different than an ETF, right? You would never say I'm an ETF investor, because that doesn't make any sense. You'd be like, well, what kind of ETFs are you buying? Are you buying commodity ETFs or equity ETFs or bond ETFs, or are you, sector focused ETFs? And it's like, yeah, of course, that's the right question, because the ETF itself is just a wrapper, right? The ETF itself means nothing other than what you put inside the ETF. And you can pretty much put anything you want inside the ETF, right? You can put hard assets, you can put stocks, you can put bonds, etc. Crypto is essentially the same thing, right? The blockchain wrapper, the token wrapper, is just that, right? And you can house pretty much anything inside there you want. You can house asset-backed tokens like stable coins. You can house equity-like tokens like BNB and Leo and Hype. You can have smart contract protocols that are powered by these tokens. Like, there's all these different things you can do, and crypto itself, again, is just a wrapper. And I think when you explain it that way, people start to, not only do they start to understand that there's a differentiation here, but then they start to ask the logical next question, was, well, explain these different differentiations. What are there? Like, oh, great. Well, I'm glad you asked. Well, first of all, there's different types of issuers, right? There's government basically issuers. There's companies that are issuing. There are decentralized protocols that are issuing. There are individuals that are issuing. Then you say, okay, great. So there's different types of issuers. That makes sense. Just like in the bond world, where you have government bonds and you have corporate bonds and you have municipal bonds, et cetera. Okay, great. Now we're getting somewhere. What else? Okay, well, within that, there's different token types, right? There are ones that are pure currencies. There are ones that are just, memes and have no backing. There are ones that are more equity-like, that have, a portion of their revenues and profits that are used to buy back tokens. No different than in the equity world or the debt world. You have some utility type tokens, right? You have, these ones that are useful in some way, shape, or form. They're like, okay, great. Again, we're getting somewhere. Well, are there different sectors? Great. Glad you asked. There's lots of different sectors. There's DeFi, which is traditional banking, right? These are anything your traditional bank and brokerage world can do, DeFi can do. There's lend borrow protocols. There's exchanges that help facilitate the trading. There's staking, etc. Okay, great. We also have areas like AI and AI infrastructure, right? These are tokens that are sort of autonomous, that are starting to use crypto as its main source of transacting, because an AI agent doesn't have a social security number, they don't have a face, they can't walk into a bank or a brokerage account and open an account and start using dollars. So they have to use a native currency like crypto in order to transact. Great, keep going, right? And you can just we have DPIN and other areas of Web3, you have stablecoins, et cetera. And you start breaking it down this way. And then you say, well, okay, then the next logical question they will ask is, well, how do these things have value? Well, great. I'm glad you asked that as well, because there's really three kinds of value in the world. There's financial value, there's utility value, and there's social value. Financial value is your traditional cash flows and revenues, right? Anything that you can use a DCF analysis on, whether that's a stock or a bond or certain types of crypto assets. If they have real revenues and cash flows, then you can model them using traditional financial analysis. A lot of tokens have some form of financial value. Again, either it's a real company like a Binance or a Bitfinex or a Hyperliquid that's generating real revenues, or even like things in DePIN like a Helium or a Grass protocol, things like that. Those are examples of tokens that have real financial value. And then you can look at utility value. Utility value means, is it useful? Can I use it for something like, airline miles have utility? Well, so do, protocol tokens, things that you can pay gas with, things that you can use for collateral or staking. If it's useful, then you can have some sort of a supply-demand mechanic to see what it's worth. And then the third one is social value. And social value is definitely real. It's impossible to model, because how do I tell, I don't know what something is worth based purely on social value. But social value is real, right? There's a real reason why certain things catch on and why there's a cool factor and why it's, fun to be a part of a community. And again, that goes beyond just crypto. There's plenty of other things, like I mentioned, meme stocks and other areas like, even like the Mag 7, where there's a social component to it. It's cool to be a part of a movement like that. So you put all that together, most investors will, after 20, 30 minutes of me, be like, oh, wow, I get it. There's actually this real ecosystem here, and there's more to it. But there's very few people who are out there talking about this. Instead, we're just yelling at each other and talking about Trump and, it's not that difficult, I guess, is my real answer. It's not that difficult to explain this space in a logical and rational way that people understand.
What do you think? So, I mean, your point basically, right? I would imagine you'd contend that about, the lion's share of the market, whether it's 80% or 90%, you can derive some form of hard value in terms of assessing the value from a fundamentals perspective.
Yeah, and those that we can't, we just ignore. There's no rule that says if you're a crypto fund manager or you're a crypto trader that you have to look at everything. Like, there's a lot of the market that we just ignore. Just like, again, when I used to run equity portfolios and debt portfolios, we didn't look at everything. We looked at the stuff that we had an edge on, that we felt like we had a valuation technique on, and the other stuff we ignored. And it wasn't like, I didn't have investors coming up to me when I was managing equities and just freaking out if we didn't have exposure to, a certain stock. It's like, okay, we get it. You're an 8-person team. You look at the stuff that you look at. You don't have to look at everything. And that's how we treat crypto. There's a lot of the market that I just don't care about and don't look at, and most people shouldn't.
Can you walk us through maybe the ways in which over the past few cycles your approach to assessing the values of different coins has changed? And when you think about the approach today, what are those factors, those metrics you're looking at?
Sure. So, as a fund manager, and this is actually kind of funny as well, because I've spent a lot of time with crypto native folks as well, who, it's funny because a lot of them have no idea what a fund manager actually does, right? They assume that, like, just because you're a fund manager, you absolutely must be chasing Bitcoin returns. It's like, no, not really. We have a benchmark, and Bitcoin is a component of that benchmark, but we don't care if we outperform or underperform Bitcoin. We're offering a specific service for a specific set of investors who want, long exposure to other areas of blockchain. They don't understand, like, well, how do you even think about this? And so, to your point, and what we look at, when we set up so we have multiple funds at Arca. I'll clarify, right? We have liquid hedge funds where we're actually more actively trading and looking at different areas of the market. We have a venture fund where it's just early stage investing in small projects. We have some niche ones as well, like an AI focused fund and an NFT gaming fund. But specifically in the liquid fund, which I think is probably what you're getting to, we've now have almost a 7-year track record here, and the market has evolved a ton over that time. Like when we first started, it was like Bitcoin and Litecoin and Ripple and just a bunch of currency like tokens that were kind of spin-offs of Bitcoin. And over the course of that 7 years, obviously the market has evolved a lot. We started to introduce DeFi and stable coins and NFTs and gaming and DePIN and AI and all these other areas. And again, each of these types of tokens are very different and often require a different valuation technique, right? And you can't look at something like BNB the same way you would look at Doge or the same way you would look at, the Grass protocol or something like that, right? And I think this is where things have evolved a lot, which is, I came from the corporate bond world, for example, and again, corporate bonds are incredibly unique and interesting. It's not like the stock market where, every stock is essentially the same and you're either getting a dividend or you're not. And that's basically the only thing to think about.
Yeah.
In the corporate bond world, again, you have different issuer types. You have different maturities. You have different coupons. You have different call structures and convertibility structures. You have different covenants that govern what more you can do, right? There's a lot of different techniques you have to use to analyze corporate bonds to analyze bonds because they're so different. And the same is true in the crypto world. Like I said, the first thing we do is we say, does it have financial value, utility value, social value, or some combination of all three? Like Solana is a really good example of having all three. Solana creates real revenue through MEV and through the fees that it earns from all the different apps that are built on Solana. It has real utility value in the sense that you can pay gas with it and that you can use it for collateral and for staking, et cetera. And it has real social value in the sense that, there's a real tribal kind of nature to Solana. A lot of people either hate it or love it, but there's a social component to it. So we can value Solana using financial valuation techniques for the actual revenues. We can come up with sort of a demand supply equation based on the actual utility and usage and future usage of Solana. Again, the social value is harder to value, but it's real. That's something that's a lot easier to value than, say, I'll give you an example like AI16Z, right? The ELIZA framework that's, a new kind of protocol that's being used to launch AI protocols. Like, to me, that's more of a one day there might be future revenues and cash flows here, but right now it's a very kind of early stage investment that we think could be really, really impactful, but much harder to come up with an actual like valuation today. So we definitely have evolved over the, almost a decade now in terms of how we look at different things and how we value them. And again, if we come up with something where we say we don't know how to value that, we just won't invest in it. Like, it's not really rocket science. If we can't figure out a way to come up with a value, then we're not going to invest in it.
So one, I think, impediment to like the future value of the entire space is how many apps actually start to get built on this stuff. When we've spoken in the past about the narrative murkiness around Ethereum and talked about institutional positioning of the platform, you kind of described it as an app store of sorts. And so when you think about these different layer ones, I'm sure a large component of future value will derive from how many people are building products on these things. How do you assess that? And the sense that I have is that we're still so early, again, because when you think about development in this space or what people are raising for, it's often to get to sort of get that value accrual at the base layer versus building on top. How do we get over that hump? Do you see that we're getting over that hump? And from just an investment perspective, what do you look for to assess whether or not a given blockchain has potentiality to be a place where folks want to build?
We now know that crypto and blockchain works really, really well. But as you said, there's still not that many actual applications that are built upon that. And I think a lot of that is due to the last 3 years of regulatory restraint that has prevented the ability to do a lot of the things that are probably should and will eventually be built on blockchain one day. So here's an example, right? If you go back to, I believe it was like August 5th, of last year, and it was a massive kind of market crash, dislocation. The VIX spiked 30%. Almost every U.S. brokerage account and global brokerage account was down. If you go to like Down Detector, they were down for hours. Meanwhile, DeFi worked totally fine, right? And you would have thought, okay, this is going to be the largest onboarding day for DeFi ever, because DeFi is working flawlessly while every single bank and brokerage is suffering from the volatility and down. But it didn't happen, right? And why didn't it happen? It's not because DeFi didn't work better. It did. Most logical people would say it did. It's that the assets available to trade on DeFi rails are not that interesting to 99% of the world. People want to trade their NVIDIA stock and their Apple stock and their REITs and their bonds, and they don't care about, oh, wow, this is a great day to go trade Dogecoin or, some other meme, right? So it wasn't that the blockchain rails didn't work. It's that the stuff available on those rails, a lot of it because of workflow and regulatory issues, was just not available, right? And I think this is where the crypto investing paradox comes in, is that, imagine, here's a couple examples, right? Imagine you saw, like, you're all of a sudden airplanes were built. And tons of people were like, wow, I can imagine so many great things are going to happen with airplanes. This is amazing technology. But for whatever reason, the government said, the only thing you're allowed to put in an airplane is furniture, like, rocking chairs or couches or something, right? And okay, there would be a cohort of investors who were forward looking and said, you know what? I'm going to invest in airplanes because I think airplanes can do so much more. Eventually, we're going to fly people around the world, and packages and all kinds of things are going to happen on airplanes. And you'd be this cohort of people who invest constantly in airplanes.
Mm-hmm.
But if you actually looked at the usage of airplanes, it would be incredibly low,
Mm-hmm.
because not that many people really care about transporting furniture or rocking chairs, right? And you could use another example, like email, right? Imagine if the government said the only thing you can use email for is forwarding jokes. There'd be a lot of people who could see what email is going to be able to do for, instantaneous, global, boundaryless communication and all the things that can one day be sent via email. But again, the actual amount of people using email would be pretty low, because not that many people care about sitting all day forwarding jokes. And I think that's sort of the paradox that we have right now, is that from an investment world, this has never been clearer of a thesis, right? We've never seen a more clear-cut picture of what crypto is going to be and blockchain is going to be. We know that the regulatory restraint is starting to break down. We know the workflow restraint is starting to break down. We know that eventually the world's assets that people care about, your stocks, bonds, real estate, et cetera, is all going to be on chain. But it's just not there yet. And as a result, we have this just sort of binary situation right now, where the investors all know it's going to work and all care about the future, but the actual usage is still really, really low, because there's just not that many applications of it yet, because of the fact that the world's assets are not on chain. And what I mean by that is, again, I'll just go a little further before I pause, but it's very similar to kind of the dot-com world, right? In the dot-com world, we actually called things dot-coms because the early internet users were basically were internet native companies, right? It was Amazon.com, it was Priceline.com, it was Pets.com, right? And it was a very distinct way of pointing out that you were an internet company if you were a dot-com. Fast forward 10 years later, you wouldn't call anybody a .com, because it'd be ridiculous, because everybody's a .com, right? Domino's Pizza is a .com, JP Morgan's a .com, Walmart's a .com. Every business that existed for 50 to 100 years prior to the internet eventually figured out how to use the internet in their everyday business, and that's what made the internet fly. It wasn't because of a handful of successful .coms when 95% of them failed. It was because regular companies and people that were already successful found a way to use the internet. And the same thing's going to happen right now. We are at that inflection point right now where the .crypto phase is over, right? The .crypto phase of crypto native businesses and companies that are building from scratch. Yeah, there'll be a couple successful winners here and there, but the reality is very few of them will actually survive and win. And what's going to happen is JP Morgan's going to become a .crypto. Walmart's going to become a .crypto. Netflix is going to become a .crypto. Disney's going to become a .crypto. All these traditional businesses are going to start issuing tokens, and they're going to start utilizing blockchain for asset transfer. And you're going to see the same exact dynamic that we saw 25 years ago with the internet world, which is that once the majority of the world's companies and assets that people actually care about are on chain, then a very select few protocols and areas of crypto are going to do incredibly well. Everything else will die off, and this will ultimately just become a technology that powers everything. And I really think that that's the analogy, and that's where we're headed. But again, it creates this sort of binary outcome that we're all sitting around waiting for.
Sure. What does that mean for a long short? fund in crypto, how does that transition impact? I mean, in 10 years, will Arca be punting gold to commodities, so short-term dated security treasuries to, energy stocks?
Well, I think the answer is I think a crypto native fund like Arca won't exist in 10 years, right? Like nobody will invest in nobody will invest in quote unquote crypto. They will invest in healthcare, and healthcare will have stocks, bonds, and crypto powered assets. They'll invest in technology, and technology will have stocks, bonds, and crypto like assets. Like, Disney, for example, I really truly believe that Disney will have a token in the next couple of years, and that token will give you 10% of top line revenue. It'll give you fast pass access at their parks. It'll give you discounts on Disney Plus. It'll give you, some sort of maybe early access to IP and things like that. And then if you're an investor in Disney, you will have to make a decision. Do I want to buy Disney bonds? Do I want to buy Disney stock? Or do I want to buy the Disney token? And you'll see capital structure investors who invest across all three. Like, I'm going to short the stock and buy the token because I think the token is going to have more value in the future, things like that. So I think this idea of investing just in crypto will go away, just like this idea of investing in the internet went away. And I think from where I stand right now as an investor today, it's a really simple investment thesis for the next 5 years or so. It's blockchain technology has proven to work incredibly well for asset movement and transfer, but the majority of the world's most popular assets, stocks, bonds, real estate, et cetera, are not available yet on blockchain rails because of this regulatory and workflow issues that are slowly being broken down as we speak. So as these barriers between crypto native assets and TradFi assets start to break down, more tokenized assets will be issued and traded and sent on chain, and there'll be certain beneficiaries. The beneficiaries will be some layer one blockchains, not all of them, but some, the ones that support the growth of these transactions. It'll be the DeFi applications that are built upon these chains because they're facilitating all of the on-chain business, lending, borrowing, trading, et cetera. It'll be stablecoins and stablecoin providers. And it'll be a few one-off, applications here and there, like maybe gaming, which will utilize some of the assets that are on chain, maybe AI, because it'll help you navigate on chain. But the reality is, we haven't even begun to see what blockchains are capable of yet because of the fact that the assets that people care about just aren't on blockchain rails. And I think, again, that's a pretty simple thesis. But to your question about how do I value a Solana and Ethereum, that's where it gets really interesting to me, because even though Ethereum is light years ahead of everyone in terms of the types of assets that are on there, and Solana is probably a close second, and then there's all these, distant third, fourth blockchains. The reality is the blockchains that are going to win are the ones that power Disney and power Walmart and power JP Morgan and power the US government. And we don't know who that winner is going to be yet. It could be XYZ blockchain that it has $100 million market cap right now that all of a sudden, for whatever reason, signs a partnership with the US government. And the US government becomes the biggest user and issuer of blockchain-based assets. So I think that's where I get hung up right now, is that I'm willing to withstand a lot more volatility today than I was 7 years ago, because 7 years ago, it really was uncertain if blockchain was going to still be around in 5 years. It was very uncertain whether this technology even worked, right? So as a result, you were going to take way less volatility because you didn't know if it was going to actually be there. Now, I've never been more certain in my life that this technology is going to power the majority of the world in the next 10 to 20 years. We have de-risked this industry more so today than ever before. So it just becomes about token picking now and asset selection more so than anything else. And again, for us, it's pretty easy. It's pick a couple of layer one blockchains that you believe are actually going to be winners. You pick the DeFi applications around them, and you pick, a few other sectors, like I said, that actually have a chance of sort of helping you navigate this on-chain world. But ultimately, the users of blockchain don't exist yet. We haven't yet to see the massive banks and brokerages and governments and companies and individuals who are actually going to drive the future of blockchain growth.
If you know which token is that $100 million market cap coin that's going to get picked by the U.S. government, please drop the ticker in the chat. I'd like to move 5 blocks closer to the beach.
Yeah, I mean, it's funny because we always said that Arca, those of us at Arca, we try to kind of find a white space where there wasn't as much focus in crypto, right? The early investors in crypto were either kind of high frequency traders who didn't care about the actual assets. They were just, correlations and volatility. And then you had your kind of deep tech focused venture guys who were I'm underwriting a massive, total addressable market 20 years from now, and I'm going to underwrite based on that. And I don't care about anything in between. And there was very few kind of, liquid fund managers like us who were actually looking at cash flows and revenues and usage and things like that. And what's funny is 7, 8 years later, there's still not that very many, right? It's still just dominated by these venture investors and these high frequency traders and very few kind of fundamental investors.
Well, yeah, this is something that we've talked about on the show a lot, which is where are the liquid guys? Where are they hiding? And we've talked about a lot on this show the impediments from both the ability to raise a liquid fund in crypto, and the difficulty to sort of actually operate as a fund manager in this corner of the market. And then, of course, and this can be a whole podcast that we can have. Then what sort of issues in the market stem from the fact that there aren't enough liquid managers? The weird crypto specific idiosyncrasies. There's a whole lot to unpack there, but it's certainly one of the more interesting issues to me.
Yeah. Well, the short answer is the liquid funds can't raise money as fast because the venture guys.
Yeah. They can just, they raise all the money.
Well, but also the venture guys don't think about the fact that they need to also be incubating and supporting liquid managers. Otherwise, they have no one to sell to when it's time to harvest their gains in the venture funds, right? And I think that's been a massive miscalculation by some of the larger venture investors and funds out there, is they haven't thought about, what to do down the road. And they have to also be educating. That's what I'm talking about. Like here's a good example. Coinbase does $6.6 billion of revenue and trades at a $74 billion market cap. So it's trading at 11 times sales. Robinhood does $3 billion of revenue, $56 billion market cap, trades at like 18 times sales. Almost every DeFi exchange that literally does the exact same business, right? I mean, Radium, Jupiter, Hype, Arrow, I mean, you name them, Uniswap, they all literally are in the exact same business as Coinbase and Robinhood. They all annualize roughly the same kind of fees, somewhere in that $1 billion to $5 billion revenue, and they trade at a price to sales of 1 to 3 times. If there were any traditional real investors in this space, they would be buying this stuff hand over fist at 1 to 3 times sales rather than buying Coinbase or Robinhood. But the problem is, one, they either don't know how to do it. Two, they've been, misinformed or undereducated on what this stuff really is. And again, I think it's on the exchanges, it's on the businesses, it's on the venture investors to help educate in the same way that I'm trying to do with you right now, to let them know that, there is stuff out there that's real, that has real revenues and real cash flows and real business models that are not, Trump, Melania, and Libra token. And until that happens, you're going to continue to see this disconnect between sort of what the TradFi world sees and what the crypto investors world. You're going to see massive alpha opportunities.
Yeah.
But at the same time, you're also going to see frustration and anger because you're effectively pedaling uphill constantly for no reason when there's an escalator right next to you.
It still seems like the entrance of firms that day in and day out look at the type of metrics that you're talking about are still a long way from entering this space on the liquid side. Like the Millenniums and such of the world seem to be solely focused on Bitcoin and not the long tail of crypto assets. Do you see that changing anytime soon?
Well, again, I mean, I mean this as humbly as I can possibly say it. I have a near 100% hit ratio when I talk one-on-one with an investor and speak about what is here. They get it. It's not that this is such a complicated topic that people don't understand. It's that the amount of information they're consuming from people other than myself and others like me is just so much greater that it's confusing. Again, this is not a difficult concept. It's just really hard to shout louder than the other guy who's bigger and louder. So you do want to believe that eventually this industry will hit some sort of like a Malcolm Gladwell like tipping point where all of a sudden it's just sort of accepted that we will look at traditional fundamental revenues. We will look at stuff like token terminal and other areas that are starting to financialize this space a little bit. But I don't know how long it takes. But also, I'm optimistic in the sense that, I remember, I'm older than a lot of people in the space, right? I'm 45 years old. I remember when people were afraid to put their credit card online or in a machine because they're like, oh, everything's going to get stolen. This is going to be just fraud. And now everybody does it, right? Yeah. Everybody has 75 credit cards linked to 400 websites. And I remember when you used to go to the airport and the new kiosks were there, and there'd be 200 people waiting in line at the ticket counter, and a few brave souls were just going to the kiosk and, beating the line by 2 hours. And now everybody uses the kiosk, and even the poor old people who still go to the ticket counter, the person just comes from behind the ticket counter and walks them over to the kiosk and shows them how to use it.
Mm-hmm.
So it's you do eventually have these tipping points. I can't tell you when it's going to happen or how, but I do think it will. Again, you have to remember that the majority of the world's assets are not in crypto, right? There's $500 trillion of assets in stocks, bonds, real estates, commodities, currencies, and there's what, 3 trillion in crypto. So that everybody who's not in crypto is more important and more powerful than anybody that's in crypto today. When you think about it holistically,
and probably better looking. No, I'm just kidding.
And then you look, I mean, like another shout out, like a guy, I don't know if people follow Charlie Bolello, who's a great research analyst and fund manager from Creative Planning. Like he tweeted out just a few minutes ago before we jumped on here, said everything is up this year: bonds, stocks, real estate, and crypto. And I'm thinking, and of course, he's talking about Bitcoin being up, not the rest of crypto that's down anywhere from 20 to 80%, right? Most people who are actually in crypto are getting murdered right now as the market is just free falling. Meanwhile, the rest of the world, who is pretty, I think Charlie's a very intelligent, reasonable person. He thinks crypto is up because Bitcoin is up, right? And it's like, that's the world we live in right now, which is that the majority of the people looking at the space don't know what to look at.
I think they don't know what to look at, but also their impression of how they're doing on their positions is not necessarily rooted in whether the market's up 5% or down 5%. It's tied to leverage, right? So if Bitcoin's only down 1%, if you're comfy in spot, you're not going to be in the trenches of those salty trenches in the same way as if you're super over leveraged. And since those people are over leveraged, I think they're obviously more vocal and then thereby dominating the discourse and the sentiment.
Yeah. But again, to dismiss that the traditional finance world won't eventually figure this out is probably pretty ignorant. I mean, like I've worked at hedge funds in the traditional world that, they were trying to buy individual life insurance plans from, 90-year-olds who were about to die. They were trying to buy trade claims of fraudulent enterprises like Madoff. I mean, like, to think that the traditional finance world is not creative and intelligent enough to figure this stuff out is just wrong. Like they will eventually come and realize there's real alpha here. It's to me, again, it's purely an operational workflow, a regulatory workflow, and an educational workflow. And the regulatory workflow is very quickly being broken down. We see that every day from all the news that's coming out of Washington and other countries. The operational workflow is still challenging. Like a big part of the reason investors invest with Arca is honestly because we're so good at the operations and trade ops more so than even just the investing, because we can safeguard their assets and we can do things that they don't know how to do. That's going to take a little longer to break down. And then the third is the education piece. You telling me that a couple of the smartest hedge funds in the world aren't going to come out here and buy, Aerodrome and Radium at one-time sales in the fastest growing industry of the last 10 years once they actually know it exists? They don't know it exists yet, so they can't invest in it, but they will. They'll eventually get there. So I think those are the three big hurdles. Like I said, regulatory is clearly breaking down. Operational workflow is harder. But education is the easiest one to break down if you just actually have a chance to get intelligent, rational conversations in front of people rather than the echo noise chamber that we're, suffering in right now.
Yeah, I think that's fair. So with all that said, when you think about the clarity around your investment thesis over the next 5 years, which is sort of the timeline that you're thinking a lot of this is going to happen, how can investors, maybe some of these hedge funders that are looking for on-chain pensions to ape into, how can they differentiate the wheat from the chaff in this space?
I mean, it's definitely harder, right? I mean, like I said, the easiest one is that you have more liquid fund managers dedicated to this space. That's probably where I've been most wrong over the last 7 years, is that, again, when we first started our liquid fund in 2018, I thought there'd be 100 or 1,000 liquid funds with billion-dollar assets doing this stuff, and there just isn't. I mean, I think that's the easiest way to do it, is you start to see real money flowing into fund managers dedicated to the secondary market. And that, again, should be powered partly from the venture community. The venture community should be looking to grow and incubate other liquid managers to help be the exit liquidity that they need. It should come from other hedge funds that are looking to expand beyond just stocks and bonds, which is obviously more competitive and lower fees by the day. And it should become from just curious family offices and pensions and endowments who want to hire a professional manager to do it. So I think that's one way. Away from that, it's harder. Like I said, I don't know. I don't know how to get some of the more obvious parts of this industry out there to the masses. And you tell me. I mean, as a media person, like if you have one really interesting intellectual story on one hand, or you have some clickbait on the other, you're going to get pressure as a media person to go with the clickbait. I don't know how that changes.
Yeah, no, clickbait is always it's always a little devil, isn't it? It'll be interesting to watch the space over the next 5 years. We'll see if the scoop is, 7 years already. We'll see, another 5 years. They're going to have to cancel the show eventually.
You're aging gracefully. You look younger and more handsome every time I see you.
Thank you. Yeah, Botox and hair dye do a lot of the heavy lifting. We'll have you on soon. Thanks for taking the time.
Absolutely. Thanks, Phil.